Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's try and make sense of all that's happening around us. There's lots happening, by the way, and lots lined up for the week as well, especially on the Chinese side. And if indeed the Chinese data comes out to be weak, then there might be expectations of a Chinese rate cut, which might actually fuel a rally in metals. So keep that at the back of your mind. But the global news flow, the big news that has happened, the White House and Republicans have reached a deal to avert the US default. Now, this is big, and we'll talk about it in just a moment. But other news, as a result of that deal, the Japanese stocks jumped up 2% and the Asian markets have risen in line. And in other news, Turkey's president uh, Erdogan has sealed the election victory to enter the third decade in power. Now, these are the top news. There's a lots happening within the Chinese ecosystem as well. I must say, Saudi Arabia is in talks to join China-based BRICS Bank. As per FT, there was a hacking campaign which raised fears that China is prepping for a conflict in the Pacific region. China's industrial profit tumbled 18%. So lots happening within the Chinese landscape. And of course, our own Parliament House getting inaugurated yesterday. But from a market's perspective, what matters is that the deal has been reached to avert the US default. Now, for most Indian commentators who came and spoke to us, they all mentioned that they are not giving any cognizance to this because they know that there will be a deal that will be reached. US won't default per se, but just the fact that when it happens, it brings about a bit of a spur and brings about a bit of a positive sentiment. That's the key thing. So I'm not getting a guest today on this US averting the White House and the Republicans averting the US default, because for almost all participants who spoke to us, global or local, they all said that they know that there will be a deal that will come. So therefore, I'm not getting a guess because the guest will say the same thing, that hey, we knew this and this is a positive. So maybe today, maybe for the course of the next few days, there might be some bit of optimism. But I do believe that there was optimism on the street on Friday's trade itself, as a result of which that might just continue. Now, US markets, first, just quite quickly bring up what the US markets did on Friday, about 2% higher. Remember, it's a long weekend for them, so no big cues today. But per se, there was optimism in the US markets. And I would reckon that the SGX Nifty should be reflective of the optimism in the US markets, the debt deal, as well as the Asian markets uptick. So look at that, a strong start, 18,712. We are nudging towards the highs, life highs. And remember, last week too was a positive one for Nifty as well, because the Nifty was up about 1.36% last week. The Nifty 500, the broader markets were up about 1.68% last week. And if you just look at Friday's move as well, the Nifty 50 touched 18,500 for the first time in 2023. So there was a big move there. 45 of the 50 Nifty stocks ended higher. Can you imagine that? While 151 stocks from the FNO universe ended positive. Nifty IT gained the most, followed by Nifty FMCG. Nifty financials actually gained the least. Now, so therefore, you would argue, why is it that this is happening? Because Friday's move was punctuated, viewers, by Reliance Industries. The big boy came to the party. And typically, we've seen that when Reliance comes to the party, it may be late comer, but when it comes, it kind of gets this whole momentum and juices flowing, which is actually positive from a market's perspective per se, independent of what's happening within the company. And maybe no fundamental reason for this to do. But at some point of time, you need the behemoth to participate for the markets to inch up higher. So we have had the first leg of a move in the last few days, wherein the momentum was achieved by banks, then by the Adani Group stocks, then by IT, and now Reliance is participating. So kind of all kegs, all the cogs now participating in a big way from a momentum as well as weightage indication, and that is actually positive news. So what's the trade setup? I personally think momentum is on the upside, with India amongst the best performing markets by QT quarter to date. I've been cautioning from 18,200 that maybe there is a chance that we might correct. I think the markets have a mind of their own currently, and they are doing extremely buoyant and they're extremely well. So the momentum seems on the upside. That's the limited point I'm making. This may die tomorrow, this may die day after. As per CK Narayan, Dr. CK Narayan's column, we are set for the optimism to last through the better part of this week. And his call went out perfectly, because he suggested caution last week, and for the better part of last week there was a bit of a cautious move. Now he's suggesting, his call is that there is some more upside there. I personally think FPI flows kind of lead to that upside, and it might continue supporting the market after that brief pause of 120 or 150 or 300 crore sell that happened for one odd day. We've had 5 consecutive days yet again of FPI flows. No doubt the quantum of the flows is lower now relative to what it was for a better part of April, but or better part of April and May, but still it is looking optimistic. From when I speak to dealing rooms, the themes that they're talking about: aviation, real estate, and even now discretionary consumption stocks. Though I have to admit, when you go onto their websites for a holiday plan and trying to do that, now hotel rooms are available. They are across the properties in India. When I tried to book a hotel room, it is available, and therefore that is a positive news uh, from a traveler's perspective. But maybe hotel companies will not have that great a quarter this time around, relative to what happened in Jan, Feb, March. Despite the fact that this is a holiday quarter, it's an okay day from a results perspective. No big Nifty numbers coming out, but a clutch of interesting names. So there is KNR Construction, which is interesting. IRCTC, which is interesting. Sobha from the real estate pack would be watched out for. Jamna Auto from a CV cycle perspective, watch out for. ITI has recently received large flows, and therefore it will be important to understand from them as to how do they say about what happens ahead, and not necessarily what just happened in the quarter gone by. And Rail Vikas Nigam, again, a recipient of massive railway orders, can it do well in the quarter four? That those numbers also will be keenly watched out for. Now, stocks that will react today to numbers. There are some large caps, there are some PSUs, and there are some very interesting winners in trade today, I reckon. So I'm starting off with the positive news and the companies which are likely to react positively to numbers. Likely, remember that. First one is Balkrishna Industries. Now remember, tire stocks have had a bit of a move already because CEAT, MRF, JK, all of them came out with good numbers. So Balkrishna is the last of the numbers getting declared, and therefore it's put in a bit of a rally behind us. But here are the numbers. Revenues at 2317 versus estimates of 2082, led by sequential improvement in volumes. EBITDA at 470 crores, estimates were 335. Big beat there, and therefore EBITDA margin, while up 831 with QOQ, is immaterial because you don't look at these companies quarter on quarter, but just look at the number 20.3% versus estimated 16.1%. Shows you what a big beat it is on the margins front. Now, it may be a sharp fall in other expenses, which may be attributed to the fall in the logistics cost and thereby the improvement in margins, but it's come out well, which is a great thing. And profit after tax at 255 crores versus estimates of 199 crores. So strong show by Balkrishna Industries. Like I said, stock is already rallied in anticipation of the good numbers, but there's a con call today. And, the volumes for Balkrishna were still a bit not muted, but not ballistic. Let me put it that way. Now, if they guide to positive volumes in quarter one and quarter two, market share in the European region because they are exporting as well, and if the low-cost manufacturing in India helps them, then boy, you might actually see that stock rally during the course of the day. It might well open higher too, but I'm saying the bigger trigger is what they say in the con call about volume. So do watch out for Balkrishna con call today. Ahluwalia Contracts is the other one. Revenue is up 18%, 863 crores. EBITDA margins 407 basis points higher at 12.8. PAT up 70% at 72 crores. So good show there. Maharashtra Seamless, good numbers. Revenues up 14%. EBITDA up 85%. EBITDA margins 19.68 versus 12.16. Strong beat there in EBITDA margin. Naturally, operating leverage to some extent coming into play, as well as lower raw material costs, I presume. The net profit is showing an optical number of down 5.94%, but that is because the company declared an 83 crore provisions write back due to amalgamation, and there was a higher deferred tax outgo at 11.47 versus 5.14 in the corresponding quarter. So there are some one-offs out there in the bottom line on both ends of the quarters, as a result of which the reported net profit looks off, but the numbers look very good. NCC, the numbers look good too. Again, it also has a PAT issue, and I'll come to that. First, the revenues, 42.32% higher. EBITDA margins expand 9.37 versus 7.76. Net profit is down 13%, but that's down due to an exceptional item of 172 crores in quarter four FY22. So that is a big thing here, right? The good part about NCC's numbers also, viewers, is that the gross debt for the company has come off to 970 crores QOQ versus 9.8 billion in FY23, 11.8 billion in FY22, and 19.5 billion in Q3. So it's come off quite rapidly, the net debt. they reduced the debt by 9.7 billion or 970 crores to come in at 980 crores. And that's quite stunning, really, what they've done, NCC, and that might actually reward the stock. Indigo Paints, I thought, was a good number too. Revenues up 12.86%, EBITDA 34%, EBITDA margins 22% versus 18%, net profit up 40%. So strong showing there. ONGC, I'm not sure. I've now realized that ONGC and India, from a sustainable trend perspective, don't really react as much to what happens in good numbers or bad numbers, but react more on crude prices. So, yeah, the numbers were weak, or anticipated to be weak in some sense. So, let's see. BHEL, so the numbers are weak, by the way. I think revenues up 2%, but EBITDA margin has come off YOY. PAT is down 33% as well YOY at 611 crores. To some people, it is actually slightly better than what was estimated per se, but there is merit in recognizing the fact that BHEL, the order inflow was very strong. Both the power segment numbers, QOQ, YY were good, and EBIT was good. Industry segment sales were also okay. But the point being, in BHEL's case, that the order inflow looked very, very robust, and that is something to be mindful of as well. I'm just trying to see what else was there when it comes to BHEL. Uh, yeah, highest order inflow in the last 5 years. Now that's something. New order inflows grew 32% in Q4 to nearly 5,700 crores. They end FY23 with a robust backlog, 91,300 crores. 4 times order book to sales. Not bad. Lumax had a weak quarter. Revenues up 4.9% QOQ. But look at that. I mean, forget the QOQ. Look at the estimated, right? 608 versus 628. EBITDA 48.9 versus estimate 59.4. EBITDA margins 8.4 versus estimated 9.4. PAT 25.6 versus 33.9. So not the greatest of quarters would react. PNC, some brokerages are saying that it's not a bad quarter, and they may well be right because they track the stock closely. But when I look at these numbers, they don't look all that great to me. Revenues up 3.5%, yes. But EBITDA margin at 17.82 versus 21.58. Net profit down 40% at 145 crores. They don't look that great to me, but I may be wrong. So, but just sounding you off. Therefore, I believe that the numbers are not great, but there are brokerages who are saying that they're happy with the numbers. And remember, PNC Infratech, by the way, is one road construction company which has bagged numerous orders in the last few months. So that is a positive going for it as well. Be mindful of that. Specialty restaurants, no doubts that the numbers are weak. Sales are up 12%, but EBITDA margins collapsed. There's a net loss. Not great at all in terms of specialty restaurants performance. Chambal Fert, very weak performance. Revenues up 8%, but EBITDA margins just shrink from 10.93 to 3.1. Net profit therefore down 61.45%. Not great. Karnataka Bank, net interest income is up 31%. Net profit is doing well, but the gross NPA and the net NPAs have kind of inched up sequentially. So, mixed bag, if you will. Renuka, not the best of numbers either. Revenues up 7%, but EBITDA margin come off. Net profit down 72% at 44 crores versus 158 crores. So, a bit of a pickle there for Renuka Sugars in this quarter. So not great. What have I missed out in the good numbers before I get to some other stocks? IFGL Refractories, there is a good set of numbers both on the revenue and the EBITDA margin front. Sequential growth led by both India as well as Europe. So IFGL Refractories did okay. Like I said, Mahindra Seamless was solid execution, so that's fine. Greenlam was okay, inline numbers, but margin expansion with the relief on the raw material front. So Greenlam could be considered good. And like I said, I mean, amongst others, I mean, Ahluwalia, etc., are all okay. PNC Infrared, like I said, some people are saying it's good. Margin beat versus estimates, a bit of a surprise to some of those. But I thought PNC was a bit weak. Now I missed out on it. Salazar Technology was apparently very strong. Net sales were up 38% YOY. PAT was very strong, 105% YOY. So good going there for Salazar. And yeah, Chambal was weak, like I said. Just rounding off the numbers from other these things as well. Renuka Sugars, like I said, was very weak. PKT was in line. So yeah, broadly covered most of the numbers. Aurobindo Pharma, sorry, I've missed. decent numbers, but a little below expectations from what brokerages are saying. So that's to be minded as well. Iron Exchange was wobbly. Now some stocks in focus. Tata Motors. Uh, Outlook has been raised to positive from stable by Moody's, so that is to be watched out for. In other news, I think ET is reporting that Tata Motors and Mahindra & Mahindra have paused the EV fundraise plans. Interesting move. I'm surprised a bit, but this needs some more exploring. So it's something for you as well to kind of look at and consider. Sun Pharma, Taro Pharma has said that Sun Pharma has made a buyout proposal at $38 per share. This will be impactful on Sun Pharma, and Monu, my colleague, will be putting out a story shortly, so you'll want to read that. And in other news, HDFC could be in focus. Bain Private Equity set to acquire HDFC Credila Financial Services for about $1.3 to $1.5 billion as per the Economic Times. Watch out for that. And a trading recommendation that has come in from a couple of brokerages. I've just pieced it together. It's a stock in focus, actually, not a trading recommendation, but Interglobe Aviation. Apparently, shorts have, I mean, when I look at the numbers and look at what brokerages are saying, shorts have been covering their positions because OI is down 10% last week while prices rose 2.5%. Delivery volume is the key thing, and percentage, 3.3 times the monthly average, and delivery percentage at 72% versus monthly average of 45%. So it's seeing cash-based delivery buying and short squeeze happening as well. Higher passenger load factors and stable crude prices may actually play into the optimism. Do watch out for Interglobe Aviation. That stock could be interesting. Also watch out for rice companies, by the way. Vietnam has a reaffirmed target to slash rice exports and boost quality. That might actually help some of the rice companies in the session today. So lots to watch out for, but optimism per se on the street, which is great sign. Proved me wrong. I'm very happy for the bulls. I'm very happy for the bears as well if they make money. My idea was only that indicators were suggesting at about 80,300 that caution was warranted. That's been thrown out of the window. For now, there is optimism. So maybe enjoy it while it lasts. Thanks so much for tuning into the Trade Setup. A bunch of very interesting conversations today, mind you, including a conversation with InfoEdge with at 9:30, with Gen Irrigation at 10:30 because they came out with numbers and they have this Revealers deal. So that'll be an interesting mid-cap conversation to watch out for. And of course, the Trade Talk conversations continue through the day with my colleagues. Thanks so much for tuning in to the Trade Center.